The markets are roaring, but not everything is what it seems. While Trump's unprecedented pressure on the Fed has sent the Dow soaring 1,200 points to a record high, Wall Street giants like Goldman Sachs and JP Morgan have quietly offloaded $80 billion in U.S. stocks. Here's what's really happening. The unconventional playbook. This isn't a normal easing cycle, it's a politically timed stimulus ahead of the 2026 election. With core inflation already down to 2.3%, a typical cut might have been 25 basis points. Instead, Trump launched a three-pronged offensive. Keycap 1: public pressure and personnel threats. For weeks, Trump publicly attacked the Fed chair, calling rates economically destructive, and privately pushed to replace 3 hawkish board members with inflation-dovish economists. The result? A 50 basis point cut in December, the largest single reduction since 2008, approved by a 5-2 vote. Keycap 2: fiscal overdrive and market distortion. On the same day as the cut, Trump announced a $300 billion infrastructure package targeting manufacturing and green energy. November's manufacturing PMI jumped from 49.2 to 53.8, a 3-year high. But the bill, along with $200 billion in tax cuts, is being funded by debt. The Treasury issued $1.2 trillion in bonds in December alone, pushing the 10-year yield to 4.8% while the Fed's policy rate sits at 4%. This rare inversion means banks borrow cheap but earn more by buying treasuries than lending. Result? Small business borrowing costs actually rose 0.3%, leaving Main Street behind while Wall Street partied. Keycap 3: trade barriers to defend the dollar. To prevent dollar weakness post-cut, Trump slapped tariffs on EU and Asian auto imports and pressed Mexico and Canada to buy more U.S. farm goods. The dollar index climbed from 103 to 106. Emerging markets paid the price. Brazil, India, and Indonesia saw $35 billion in outflows in just 1 week. Forced to hike rates despite lower inflation, 2.47% versus US 2.57%, the recovery momentum is now at risk. The IMF warns this beggar-thy-neighbor approach could trigger global trade tensions. Why Wall Street is selling the rally. Goldman and JP Morgan aren't just being cautious, they see a policy-driven surge with weak fundamentals. Inflation could rebound, forcing the Fed to reverse course. Meanwhile, global policy divergence is widening, the ECB is on hold, Japan is hinting at hikes, and only the US is flooding the system with liquidity. Capital may soon flee to safer emerging markets. The bottom line. Trump's rate cut blitz is less about economic rescue and more about election engineering, trading Fed credibility and global stability for short